banking can indeed go retail and it will benefit everyone.
Hello. Thank you for joining us today. My name is Ronit, and with Gaurav, we are going to be your hosts for the next 30-40 minutes. Ope, greetings. Thank you for joining us. Where you zooming in from today, Ope?
Hi, Ronit. Thanks for having me. I'm in New York today.
New York.
Wow, you're early.
Yes, it's 8 a.m. here, and my eyes still have bags under them.
8 a.m. So you've been to bed and woken up, or you've just been awake all night?
No, I've been to bed and woken up.
Well, you're in New York. I'm zooming in today from London, and Gaurav is the furthest east today.
In Dubai. Happy days.
So,
I think
Ope, tell
for
us a little
Gaurav,
bit
the day
about
has
your
almost
business.
ended.
Tell us a little bit about OnePipe. So, OnePipe, it's an API aggregator. It basically gives banks and fintechs a standardized gateway. You call yourself the chief plumber, and your colleagues plumbers. What's that all about? Unpack all that for us.
Yeah, so if you take a look at the financial services sector, the way we see it is like they're the concentrate providers at the very bottom of the food chain. That will be banks, typically. Hold deposits, hold a license, etc. Then on the very, very end of the value chain, you see consumers like myself and yourself, right? Now, what does it take to get the concentrate from the producers, in this case banks, to the final consumers, me and you? We believe it takes a network of pipes to move the product from, let's assume the product here is water, to move the product from the banks all the way to the consumers. Now, if you look at it from a perspective of how you get water in your house, all you have to do is open the tap and the water comes out. But there's a water works, as we call it in Nigeria, at the background. There are lots and lots of pipes in the middle, from big pipes, small pipes, etc., all the way for you to now get water in your pipe. Now, because of that, our work as OnePipe makes it possible for banks on the back end and some fintech to, in quotes, produce concentrates to customize products, expose them as APIs, and make it available to businesses who can then offer it to me and you. So because of this work that we do, we call ourselves plumbers. Again, fundamentally, it's OnePipe makes it possible for non-fintechs to offer fintech services to the customers they have some kind of influence over. And we do that by simplifying the financial services on the back end and turning them to easy to use APIs and products that are best suited for those particular customers in whatever segments that they are in.
So who are your clients, Ope, and where do you operate?
Yeah, we primarily operate in Nigeria now. We're almost done getting Kenya off the ground. Our key customers, if you allow me to sort of go to describe the market landscape in Nigeria a little bit. Ideally, you will have the digital economy and you will have the informal economy, right, in almost every part of the world. The challenge with Africa broadly is that the informal economy is about 90% of the formal economy. Because of this disparity, this informal economy now has some attributes that make it difficult to even reach with financial services. It is very heavily cash driven. It is value chain specific. The expectations of a farmer is different from the expectations of a trader. In fact, to make it more difficult, the expectations of a trader in textile is different from the expectations of a trader in food and groceries, right? So as these nuances start to come out, at the end of the day, money is money, right? But the way they all see and use money is just different. And then they are offline again. So our key customers are aggregators within these supply chains. So if it's FMCG, it's a distributor. If it is agri, it is an in Africa, we call them off-takers. So people who buy from the farmers and sell to the larger companies. These are our ideal customers, right? So people who are businesses in that informal sector offering specific products and use cases for that particular segment in the informal economy. And then we provide them with the tool set to offer financial services like wallets, payments that are embedded, and credits that is more contextual to the industry that they are in. At the high level, these are our type of customers. But then to take a step back, there's a wave of digitization that is now going on across Africa, particularly in FMCG, to some degree agriculture, to some degree mobility. There's a wave of digitization that is going on. The number of startups are springing up that offer B2B marketplaces, some way to download an app and place an order directly from a distributor and it will be delivered to you. Now, as this digitization effort is ongoing across the continent, OnePipe is arming this type of companies who are digital enablers in specific segments with the fintech services that they need to reach these customers. So those are two types of customers, the pure informal ones, and then the new generation of tech startups that are not fintech by natively, and then giving them the tools to offer fintech services.
So you've got these on one hand, the clients you're connecting, so the non-fintech tech companies. Then you've got the informal economy, which is more the Africa flavor, I guess, or the continent flavor. And then you're connecting them via your APIs to financial services products.
Correct.
Now, who are those financial services products being provided for by, and what has been the level of receptivity or engagement from the traditional FIs or fintechs? Is it mainly fintechs providing these financial services, or is it banks? And in some countries, without naming names, existing institutions have been very hostile to API-based open banking plays. I'm sure Gaurav has no experience of any of that, but you know, sometimes banks look at this and go, "Whoa, what is this?" Right? So I'd love to hear your views from a Nigeria perspective.
Oh, I must tell you, it's tough. It's very, very tough. It's almost like being a missionary in a country that loves what it loves, right? But then, without naming names, like you said, so it's like being a missionary in a country that loves what it loves. But as you go out and you continue your evangelizing, you get one or two converts here and there. Maybe those converts will get the next set of people to be a little bit jealous, and then they want to hear more about what you're doing. So in a sense, on the back end, we focus first on traditional FIs. The very first year of OnePipe was a lot of hustle, convincing traditional FIs that becoming an API layer is beneficial to them. The very first year was really just evangelizing, like going bank to bank, having meetings, explaining and re-explaining, creating white papers. It was just difficult, right? But I think once we got the first one or two banks interested, again, because we are actively involved in the open banking movement in Nigeria, for example, we get this two-pronged approach where we can say, here are the economic benefits of turning your banking services to a set of APIs. Oh, but by the way, look at how open banking is doing in Europe. Look at how it's doing in India. Look at how it's coming up in Latin America. And it is coming to Nigeria very soon because we know it is coming. Like the guidelines are out, etc. So as we do it from this two-pronged approach, we find banks who will say, at times it will be, please describe to me what open banking means to me. At times it will be banks who will say, in the absence of open banking, how can I monetize some of my existing assets a little bit more by extending my reach, right? So there's the economic side of it to those who want to hear it that way. And there's the, well, regulation is going to come anyway, asking you to do this thing. Better to get ahead of the curve, right? So these are the two ways that we did. But on the back end, our primary focus is in traditional FIs. But that said, we also noticed that the products from traditional FIs are usually, for want of a better word, almost commodity. They don't usually match what the customer really wants. Like deposit is deposit, money movement is money movement. But again, if you go back to the very front end, the kind of credit, for example, that a retailer wants, this retailer just wants you to assess them for credit based on their turnover, how frequently they buy from their supplier, etc. A bank doesn't understand or care about that. A bank says, give me your bank statement, 3 years financial performance, blah, blah, blah. The guy doesn't have all of that. So we take credit product from a fintech that is a bit more flexible. We take deposit account from a bank that is open to it. We merge these two together and create one single API, and then offer that to whoever is talking directly to that retailer. That's just one example. So we combine traditional with fintech to create what looks like a bit more contextual use case on the front end.
And what is the regulatory landscape like in Nigeria or other markets like Kenya you're looking at? Do you need like quote unquote open banking, open finance regulations for your business to grow? Or like in the US where there aren't any European style, EU style legislation, open banking, kind of screen scraping has grown quite rapidly. What's the regulatory environment like in Nigeria for this? And do you need something more specific?
So up until now, we've operated outside of direct regulatory drive. Again, because from a Nigeria perspective, there's no firm requirements to fit within a regulatory, I don't know how to put it, like to fit within a regulatory guideline. It's basically banks offering their services as a set of APIs. But that said, a firm regulatory push asking banks to do this will supercharge us 100x. The good part is that sometime last year, the CBN ratified open banking guidelines, high level, informing banks that here's the directive for open banking, here's how you should think about it, here's how the framework should work. The good part also is that we now also have a PSSP approval in principle from the CBN that allows us to fit within that framework. But in the absence of all of that, like pending when it becomes concrete, we focus more on when I was describing the commercial use cases for the banks. Their bank, you already have what you have. You already have fragmented APIs internally anyway. What if we consolidate that for you and help you take it to market? And when open banking becomes something you must comply to, then you know that you're already ahead of the curve. In fact, you're already learning to monetize it from day one, right? So for us, it's when open banking becomes firm and has a firm date on it and firm, clear specifications, it will totally supercharge what we're doing. But in the absence of that, we just empower the banks that work with us to do what they do.
I want to bring Gaurav into conversation and maybe grill you a little bit more about the business itself. So Gaurav, over to you.
Thanks, Ronit. And, I'm going to help Ope just a little bit before I grill him. You asked, is it necessary to do what he's doing? I think his T-shirt, if he pulls it down a little bit, literally just says the world needs a new type of financial service. So I guess Ope's selling a script right there on his shirt. I don't know. Unfortunately, our podcasters can't see it.
Like if Ope had like a like one of those kind of like surrealist 1920s like pipe, the smoking, fill it,
It's very Star Wars. I feel like if Ope stands up, it'll say it.
Yeah.
Yeah.
There we are. Oh no, it's blurred. I can't see it. There, that's it. The
world needs a new type of financial services ecosystem where everyone has a role to play and some value to capture. And while it is necessary to have gatekeepers, their influence needs to be minimal. That's really the manifesto on which OnePipe is built.
Cool. Yeah, you do need the logo though. Ronit's right. You need the pipe.
A pipe. I mean, a little 1920s surrealist pipe or whatever pipe you like. I don't know.
Sherlock Holmes.
I was on a panel yesterday in Lisbon at a conference, and this dude showed up with a blue hat. And I was looking at him going, why does this middle-aged man have a blue hat? And then I realized his company is called Blue Hat. I was like, oh.
Always be selling. Always be selling, right?
Man.
Always be selling, man. So Ope, I've given you a bit of a breather. Now here comes the heat, right? So let's kick off, brother. So
let's do it.
I mean, Ronit's walked us through very nicely about what you're doing and everything else. Let's get into a bit more of where you are, right? I mean, you're not the only game in town, right? So what I want to understand is, just for our listeners, if you could put some meat on the bone for telling us two things. One is, who would you compare yourself to as a peer in the market globally? I mean, who, with, somebody was to look at a company globally, who would you be most like? That's the first thing where we can closely recognize. And the second thing I'd like to understand is, who are your competitors back home? So let's answer those two questions would be great.
From a global perspective, again, this entire banking as a service on the back end, embedded finance on the front end scenario is still very early. And the global examples that at least have some noticeable brand recognition of title will be Unit in the US, Synapse in the US, Treasury Prime, Bond. In Europe, it will be Rosa, it will be Solaris Bank, etc. You see that all of these guys are sub 5 years old. The most recognizable among them will be a product from Stripe called Stripe Treasury, right? And so from a global perspective, those will be things you will compare OnePipe with. Now, if you look at all of these, whether it's a product or a company, it is all pretty early. So I think it will take a few more years to then have some strong stamp of here's who the global leader in this category looks like, for example. Now, locally, if you pardon me from doing a little bit of chest thumping, I think we were the first. I think we were the first to toe this path. So because of that, it's still very early on the African continent. But in recent times, there have been companies like Anchor, like Block, and there have been a few more coming up this year that we think, and I think all of that is born out of, okay, we're seeing banking as a service in the US and Europe, and in Africa, there's a need for something like that. So I think as we head towards 2023, there'll probably be 2-3 more companies that will join us on this hustle. But so far, locally, the most noticeable names will be Block and Core, at least from a Nigerian perspective.
Very interesting.
In East Africa, there's Ukeshe. In East Africa, there's Ukeshe. There are a number of other smaller just coming up type of players.
And let's talk about your geographical aspirations, right? You touched on the fact that you're based in Nigeria, but you're looking to go into Kenya. You laid the groundwork. As things move, and we've talked about regulation, and we've talked about operations and setting up, and how those two sort of coincide with each other to be able to make you operate your business or grow your business. What I want to understand is there a more friendly ecosystem to set up, in the continent? Was Kenya something that was an obvious choice from a perspective of regulation? Is it going to take the same amount of time for you to establish your business in Kenya at the same rate, or is it going to be faster? I just wanted to understand how your business is affected if you want to keep growing from country to country. Are you going to keep facing the same obstacles and start again and then take 2 years to grow, 1 year to grow? Or is it something where you can do it in 3 months faster because you've got so much, pipe laid down?
In fact, you've spoken to my biggest worries at the moment that are giving me this gray hair that you look at. What we've learned is that every market will be market specific. There's almost nothing you can do about it. From an operational and technology standpoint, we sort of laid the foundation right. So imagine that we set up this network of pipes. We're comfortable with it. We put some taps connected to those pipes. We're comfortable with it, but you need a waterworks to plug it into. Now, as you go market to market, the requirement for connecting your pipe to the base regulatory environment or the banking partners we are learning will always vary. And if it takes you 1 year, for example, to get your first bank in Nigeria, it's probably going to take you close to the same 1 year to get your first bank in Kenya. It doesn't mean that when you get to Cote d'Ivoire, it will now suddenly be shorter. Again, because the regulatory environments are different, the cultures are different, the maturity of the financial services infrastructure is different, etc. So it will start to vary on a market-to-market basis. And we are not deluded that just because we've done a good job in Nigeria, it will be easy to just spread it all over the continent. Now, what is clear, though, is that at least as you start to engage banks in other parts of the continent, you can always reference what has been done from your past implementations. So those references help to create some kind of understanding of what you're describing. So to some degree, it could only be a little bit shorter, but it won't be fundamentally shorter just because of the regulatory environment. Now, my thinking is that if you pick countries that are following each other, so Nigeria released open banking guidelines not long after that. Kenya announced an interest in open banking as well. So if you pick countries where the regulatory environment or the market structure seems to be following themselves, you can sort of spread yourself on the continent on a calculated basis. So you pick Nigeria, you pick Kenya. Because you pick Kenya, DRC is next door following Kenya. Because you pick DRC, Cote d'Ivoire is also towing the line. So you pick countries specifically like that that look alike, and that's sort of how you spread out across the continent.
Thanks for that, Ope. Very interesting. I think, talking about the geography, talking about regulation, I'm going to move to the next step, which is your customers and your products. I know we've been talking a lot about the infrastructure, laying down the pipe, putting a tap in place, but I want to put specifics on things a little bit for our listeners, if you don't mind. Walk us through two sets of scenarios. One is you doing your discovery, because this is not a cookie cutter business. You're not doing BNPL. You're not doing something else where someone has a template on which they can base, learn, and set up a core product and offering or service. You're literally going out there and doing discovery as well as establishing a business at the same time, with a lot of nuances to it and being fresh. Tell us about how you built your product and who your customers are today.
Okay. First, we provided what we thought were a set of native APIs. APIs to open deposit accounts, APIs to manage those deposit accounts, APIs to operate those accounts, if you can put it that way. So debit, credit, statement, balance, all that usual stuff from the banks that support us. Then we started shopping around these APIs. It turns out that shopping around those APIs wasn't enough. So we said, hold that a little bit. How about going into specific market segments and understanding how those market segments are structured? So we started visiting distributors, for example. Can you describe how you do your business? And then they go, oh yeah, we pay this bulk amount of money to the manufacturer, and then they send us goods to our warehouse. And then we also give those goods in bulk to wholesalers who then meet retailers to sell it to them. And then from then on, we are blind. We don't know what's going on again. So we went and visited those retailers and those wholesalers, and we found out that the wholesalers were giving it to the retailers on a credit basis. So here are products for your shop. I'll come back with my money in 2 weeks' time, right? The distributor doesn't know the structure of how that works, but that exists today. So we then go, all right, that's fine. But their distributor, would you like to have some visibility into what's happening in your secondary sales? The answer is a firm yes. For that visibility to happen, then you need to have some way for those retailers to buy directly from you, but these retailers want credit in the first place. So we created some SKU management platform built on top of our APIs, empower the distributors to load their SKUs onto that platform. We send our own sales agents into town to then recruit retailers for that distributor. And the story goes like this. Their retailer, prior to now, you couldn't buy from this distributor because it would never sell to you on credit. We've now got a bank on the back end that will help you pay that distributor. And this distributor has promised to send you the goods once you pay. Would you like that? All retailers say, firm yes, we would like that. So we provide some WhatsApp channel for these retailers. On that WhatsApp channel, they request the products that they want from the distributor. Once they make those requests, they also request a credit line from our partner banks. Our partner banks will credit the distributor immediately. Once the distributor gets the alert that it has been credited, here's the order. They send a shipment down to the retailer immediately. 7 to 14 days later, the same retailer repays that credit line by depositing cash via some other agents into that same account. But that now has to create a digital trail for him that is now used to assessing for ongoing credit on an ongoing basis. So technically to the retailer, his behavior hasn't changed. In quote, is requesting product via WhatsApp, is getting the goods at his shop, but this time he's now paying digitally, he's ordering digitally. Things look a bit more digital now. And as we move in that direction, you start to see more and more banks now willing to participate in the process. Like the opacity that they had before was going away. Now they can see what's happening at the last mile and they can underwrite that credit better. That's one example in trade and FMCG. Let's say an equivalent in mobility as well. Is a driver in Bolt, is driving all over town. He wants some credit to finance his next vehicle. Is asked for a statement. He has no statement, right? Meanwhile, the platform provider knows that this guy logs 12 hours a day driving, 8 hours a day driving. 8 hours a day equals $1,000 in revenue a month. The bank doesn't know that. The mobility platform knows that. So we provide this driver with some tool to track his usage and his revenue from the mobility platform. And based on that behavior, the bank then steps in and say, here's the car for you. Drive it for the next 3 to 4 years. Just pay a portion of what you earn to the bank. So these are some of the use cases that we've had to build on top of the APIs that we had as we moved along.
So it's not really just APIs, you're building value-added API services.
Correct.
So in essence, how long is this taking you and how big is your team? Because I mean, let me go again. How big is your team and how many products and services do you offer today?
Okay. We are now 52 people, largely engineering and operations. We are supported today by about 60 field sales agents on a contract basis. So those are the ones that go into the informal market.
Yeah, DSOs.
Yeah, DSOs. Yeah. So they go into the market and do that. So all in 52 people, about 60 field temporary staff.
Agents. Yeah.
What was the second question again?
How many products do you offer today?
So on top of the native APIs, we then offer 3 core products, which is really a mishmash of the APIs. One is wallets as a service, which is basically accounts as a service. The second is credit as a service. We call that pay for me because we focus only on credit for productivity basis. So for example, inventory finance, asset finance and mobility, input finance for agriculture. So second one is credit as a service, but specific towards productivity. The third one is now payment as a service. As you know, payment is cookie cutter in Nigeria. Everybody has some flavor of payments. So we have various expressions of that payments that go from cash mop-up, P2P transfers, P2business payments, either as a set of APIs or some website you visit, put in something and pay something, right? But directed heavily at informal sector. So these are our 3 core products, payments, wallets, and credit. But then again, each of these 3 are also APIs, right? It's now become necessary that as we move into the informal sector, where there's no digital assets, really, we therefore have to create other products on top of these same 3 APIs. So we created the SKU management platform in partnership with one of our key customers, a company called WeConnect. We created the mobility one in partnership with one of our customers also, a company called NGO. We created a mobile app that already integrates all of these APIs within it by default, so that if you as a distributor come to us and go, I like what you're saying, but I have no digital tool set, we say, here's an app for your customers, here's a backend SKU management for you, and these 2 things are already connected to each other and connected to the APIs from OnePipe.
Now, something to find out, it's obvious that you had to go the extra mile to really create value for people to adopt these services, otherwise they weren't going to. And I think it sounds to me like inadvertently it's created stickiness for the product as well. So I guess you're building APIs and then you're building further into all these services and products and sectors of your clients. So how many customers have you got today?
Yeah, so we have about 400 business customers. Via these 400 customers, they use us in a mix of ways. Some are digital enough to take APIs. Some don't care and say, give me the full product that sells my needs. Now, of these 400 rough business customers, we've now issued about 4 million accounts, well, 3.7 million to be exact. We've issued about 4 million accounts to different retail customers now. So basically, we use the businesses to get to the retail end. So 400 businesses, roughly 4 million individual customers. Of these 400, about 75% are tech companies themselves, and about 25% are these traditional ones that don't care about tech.
So 4 million.
Yes, 4 million.
Okay. And these are active users, like people who have engaged in platforms, obviously consuming frequently.
Yeah, so to be practical and very transparent, these are total, not active. So when a business signs up with us, we convince them that who are your customers? Can you issue an account to all of your customers? Let's start from there. That's what gets us to 4 million. Now, once we get the 4 million, we then go, all right, let's now segment your customers. Which ones among them are retail based? Here's how they should use it. So of this 4 million, pardon me not to give the percentage that is active.
No, you share with us what you're comfortable with, Ope.
Yes. But I would say what we are doing is that we're pushing activity. So the way we see our active users is in 3 layers, right? We call some truly active, which is customers who generate for the platform at a minimum $1 in revenue a month. Then we call some active, which is the next layer. Active is customers who at least do one money moving transaction in a 30-day period. Our active is a little over 50% now. Our truly active is way less than that. And we find out that the truly active number starts to happen when we create these value added layers on top. So when you just say, here's an account, please use it if you can, you get an active user once a month. When you say, okay, describe your problems to me. What can I build on top of what I've done? What can I create bespoke for you? Then start to get a truly active user. Now we moved in that direction of pushing value-added products earlier this year, and that's what's now taking up our truly active user base it's basically now increasing. But active is somewhere like half of the base. Truly active is a fraction of that.
Brother, one last question before I hand back to Ronit. First, let me say congratulations on everything you've done so far. Interesting to see what challenges and obstacles you've overcome in whatever time frame you do it. But before I leave you back to Ronit, question. It sounds like you've got a lot of movement of money happening, lending, credit history building, value-added services. Is issuing next?
Issuing?
Yeah. Are you going to offer card services to your clients, or are you already doing that today?
I would say
or am I jumping the gun here and giving away too much?
We are experimenting. We're experimenting with cards right now. We think sometime next year we will launch cards on top of the accounts that we issue. Again, we are very, very partnerships driven. So one of the internal debates we have right now is you need to put cards on top of the account you are issuing because customers want it. But is that your core business? Should we just partner with another infrastructure company that offers cards instead so that you can move faster?
You mean like Perseus?
Exactly. Or should you continue to try and do things by yourself? It's one of those internal debates we have, but I think those debates will come to a conclusion by the end of the year, and then we'll know what we're doing next year. But clearly, some of the customers are asking for cards, and it could end up being one of those distracting things or one of those things that supercharge us, and we're trying to decide.
So I had a peek in your crystal ball, brother. Sorry about that. Don't mean to ruin any surprises. Ronit, back to you, brother. Before I accidentally push him into that
anymore. Keep the kimono closed. Maybe we can rephrase that question and talk about what does OnePipe look like in 2025? Or is it multi-pipe? I don't know. Or is it no longer a pipe?
It will remain OnePipe. So by 2025, our main goal is to be able to look at the African continent and say, here are 2 to 3 million truly active users in specific industry segments that get their banking services from the next node in their supply chain, not from a bank. Now, we think if we can hit that number and we can make that happen, then it will send a very strong message that if you want banking at the last mile, it is doable. The banks will benefit from it because you're extending their reach, and the last mile customers are also getting the exact type of banking services that they need. So our goal is that by 2025, let us demonstrate that on the African continent, banking can indeed go retail and it will benefit everyone.
Ope, thank you so much for joining us today. It's been a real pleasure to host you. Stay in touch. All the best. Godspeed. Good luck.
Thank you very much for having me. And
And
helping me
change that
evangelize.
T-shirt, Ope.
Okay. I'll get the pipe on it. I'll get the pipe on it.
Pipe. Yeah, you need
Thanks
a
a lot,
pipe.
Ope.
Thanks a
The
lot.
Belgian surrealist pipe.